Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, September 23rd, 2008. Well, it was a very choppy day on Wall Street today as the whole testifying ahead of the Senate Banking Committee took place, and it was really interesting to listen into what was going on as the players there attacked Bernanke and Paulson over this whole bailout idea, how things had happened. It was really actually remarkable to hear for those of you guys that listened to it. And they just went back and forth, as they tried to dissect the whole idea of this $700 billion, and I said $billion bailout plan that the Fed and Paulson want to do for Wall Street. And lo and behold, you really had that kind of pause-ish time frame while this was going on. I mean, as traders, we're in the chat room, obviously, we're trading amongst our friends and peers and traders, and we're just kind of watching this market go on, and it was actually relatively slow while this was going on. Everyone was obviously tuned into it, trying to figure out what exactly was going on. The markets were basically flat to slightly negative. They began to sell off, and we'll go right into the charts here. They began to sell off towards the end of that, and you can see right here, early on, we're really trading in a range. And I want to just draw this in because it's a beautiful little line here. Notice this support line. All morning this was holding, and you kept on bouncing off of it, even from pre-market levels. You see the little bounce here, bounce down, rally on the open, then you came all the way back down and tested that level again, and kept on bouncing off. Ultimately, you just hit it one too many times. And we always talk about the door scenario, where when you run against a door, you can run 3, 4, 5, 6, 7 times. Eventually, at one point, that door will give way, and you'll fall through to the other side. It's exactly what the market's like, all right, as a psychological kind of analogy there. You come down here, you ultimately break down. This happened to be just towards the end of the testimony, and all of a sudden you start to sell off hard. Now, the interesting thing about this is you basically bottomed out on the lower end of the market here, and we were actually testing the 0.618 retrace level right down here. All right, and then all of a sudden a rally starts to come in the market, and we recapture that 0.618 retrace, which again is a Fibonacci key number in technical analysis, and start to rally higher. And this market actually rallies very, very strongly, and you can see the volume actually was very decent on that rally. At some point, though, you begin to hit the resistance from this morning move, and this is where things really get testy here. As you come into this upper range, these tops right here, you can see it, and you can actually see the volume just dip initially on the sell-off, and then the volume start to kick in as things dropped. And the idea here, guys, is that the market is waiting for this bailout plan, and it's looking more and more like it's going to get dragged out. Now, whether or not it does, who knows? But that's the way the market's feeling right now. And until the market gets something, or at least starts to see some progress on that front, the market's very skittish because it's a very time sensitive thing. I mean, these banks are not exactly stabilizing their money flow and credit at this point in time. So you have to understand that this is a very key thing, and especially all the little things that these government officials are throwing out. What about this? What about this? I want to see this changed, and I want to see that changed. And they really are acting right now as if they don't want to approve anything until they see these changes, which, in Wall Street's eyes, they're saying, oh boy, here we go, another governmental thing that lasts forever in an attempt when we really need this bailout. Now, listen, am I happy with the bailout? Absolutely not. I think it's a shady thing. I think it's screwing the country in the long run. In the short run, sure, it's a Band-Aid. You put another Band-Aid on, just like in 2000, lowering rates as low as Greenspan did. It was a Band-Aid. It created the next bubble. Then this bubble crashed, and you had the housing bubble come up, and then that's crashing, and you have the next Band-Aid put on. And so it's just a Band-Aid effect. But that's the idea here, guys. And as long as we know, then we trade it. And that's all there is to it. As a trader, I'm not an investor. I'm an investor because, I have that mentality of wanting to make money, but I'm a trader in essence. I want to make money. I don't care what way the market goes as long as there's a trade that I can follow. And that's how everyone, in my opinion, should be that can at least follow the markets on a once-a-day type outlook. But in any case, you guys can see what happened here. The market's dipped. You had a nice double bottom here in the markets, and we want to follow this key level very closely because we're right approximately, we're actually a little lower than it, but it's okay for now. We want to see if we confirm the move down tomorrow by going even lower, or do we hold this 0.618 retrace level on the markets. So we'll keep that in mind, folks. Just one thing I can point out here, you can see a little bit of a head and shoulder pattern in the markets here. You can see a shoulder, head, shoulder. I like to just point out these various patterns on the market, and you can see the breakdown that happened. The head and shoulder pattern is a very bearish pattern, and you can see how it played out beautifully once it broke this neckline. All right, let's get right into the SPY here so we can get some analysis done on the daily chart. Now, all right, we obviously know that the key here, folks, is we came in Friday's video, and I want to just talk about our various calls on what we thought the market was going to do. We had the turn date on Friday, which we had that big move on Friday, which actually topped out up here. You've had a pullback. We talked about the pullback possibly coming in. We, again, did not anticipate yesterday as being such a big down day. Today was an okay. It wasn't a huge down day. Dow was down about 150 odd points. Let's get the exact totals on that. 161 down on the Dow. NASDAQ down about 25.5, and the S&P down about 19. About 1%, 1.5% across the board. But the key here, folks, is now you're beginning to get into that 0.618 retrace level from the areas right here. You're actually a little lower than that, but we'll give the market the benefit of the doubt here and see if we confirm it. So here's a 0.618 retrace from the top, from the bottom to the top, and then the retrace back down, and we want to see how this develops into tomorrow's market and in the next couple days. We are anticipating, and right now we are giving the market the benefit of the doubt here, that you're going to see another move up. And it almost seems like it's coming to fruition. If they can ever the government can ever do this bailout plan, you should see a nice push back up on Wall Street. And we'll have to just continue to watch it and look for little news tidbits every day to see if they're getting closer. All right, but in any case, the 2-day sell-off here over the last couple of days is pretty ugly. You're talking about over 5% drop in the indexes in the last 2 days combined, and that's a retrace back down after about an 8 to 9% move off the lows here, from the low here to the high here. So again, a retrace, Fibonacci approximately 0.618, and we'll keep watch. Now, that's what we're looking for right now. We still think we're setting up for another move higher in this market, but again, tomorrow can really tell us the tale. If we continue lower and we take out that 0.618, I really do want to hold that. If we do, however, you're looking at good support right here. You can see the low of this candle and the low of this candle match up, and then after that, the low right here would be the ultimate support level on the downside. On the upside, you really can have a big move. If anything comes out, you could see a move back to this 20 moving average on the upside, very possibly. And again, we are favoring an up move now that we've seen the pullback that we expected, even though you probably don't want to see it go any more than this. This is about what you want to see. You want to see a 0.618 retrace, which is a solid retrace. It happened very quickly, but that's the volatility of the market. All right. Now let's talk a little bit about our call yesterday on the dollar. Remember yesterday in yesterday's video we talked about the dollar needing to pull back, and we talked about how the dollar needing to bounce. We talked about how we had called the top on the dollar. The dollar had really come in very hard, and now all of a sudden you're expecting a little bit of a bounce back up higher in the dollar. And we can look at the UUP, which was up nicely today. You can see a nice little bounce back up to this closing really right on the 50 moving average here. And we talked about how in tune with that, you likely would see a pullback in gold and oil. And we'll check out the gold and oil call as well. And you can see a nice little pullback or a little pullback on the GLD today, down 86 cents. And oil itself pulled back beautifully. We'll look at the USO, and you can see a pullback on oil as well. So, again, just looking at the charts, and you're just realizing the key resistances. And this didn't necessarily have as much to do with our proprietary techniques, although we did confirm it with those, as much as just noticing here how extended the USO had gotten and how it had gotten right into this gap window area and the resistance of the 200 moving average, which is the pink line stretching right here. All right, you put those factors together, and you're going to have a pretty solid chance of a pullback, at least for a day or two, which is what we got today, at least the initial day. So again, nice call on that for the UUP, and again, I'll show the UUP chart. This is where we had called the top. This is where we had called for a bounce, and you can see a nice retrace back up. And we'll see if we continue to see that. A lot will have to do whether or not this bailout plan comes through, because remember, the dollar started to tank on the thought of this bailout plan because of the dilution of the dollar. All right, so obviously they're going to flow in at $700 billion to $1 trillion. It's going to obviously dilute things a little bit, and that's why the dollar got weak. If they start to look like it's going to take longer, you may see a continued bounce up on that. Or if it comes out and it's not any bigger than the $700 billion, you may see also a little bit of a support on the dollar. Especially considering this, folks, is eventually you're going to have these foreign banks start to lower interest rates around the globe. That will buoy the dollar itself. So again, look for good support right here on the dollar. I wouldn't be surprised to see a little more upside on the dollar bounce back, and then we'll look to see if we see another flush on the dollar but that's not too far off. All right. Today, a couple interesting signs, and I want to point this one out. Of all of them, I want to point out Goldman Sachs. Very interesting trading into the close here, and I just want to point this out. We look at Goldman as a leading indicator here, and you had a nice rally off the lows here. And remember, the market, at this point, the market was rallying, and then the market starts to go back to the lows. This is what the market did. Look at what Goldman did on heavy volume into the close. Very, very interesting. And we don't know if this means anything yet, but it just puts you on alert to watch on Goldman Sachs. All right, and Goldman can be a market leader. You want to see, does this mean anything more than what it is? Just was it short covering just at the end of the day, or is there something that leads us to believe that Goldman Sachs kind of knew something ahead of time and is heading up into the close? Because Goldman closed very strong today, up $4.50 almost, or about $4.25, really at the high of the day, and that's something we definitely need to watch to see if that's a leading indicator for some sort of move up in the coming days here. Okay, guys, other than that, that's about it. Watch that fib number tomorrow. Let's see if we can't stabilize the markets a little bit, maybe get a bounce. We'll talk to you all tomorrow. Come join the chat room, fantastic chat room. Join the Swing Trade Alerts, and also look for the new website, which should be debuting in a day or two. Take care.